Hello. Today we will ask Bunker Bear about economic chaos. Bunker Bear,
Yes.
why do you think the markets are so unstable lately?
The economy is a complex, nonlinear, dynamic system. Systems like that are subject to the chaos, which says that even a tiny change can produce unpredictable results. It is the butterfly effect. And our morons in Washington are like giant demented butterflies, making big changes in the regulations and money value and supply. Engineering would not be stable if these morons continually changed the units of measurement and the laws of physics.
Maybe our morons have not heard about this chaos. Is it new?
The Henry Poincaré found it more than 100 years ago, when studying planet orbits. The Edward Lorenz found it in 1961, when studying a computer model of the weather. Here is a picture of some of his results. The black line is the first computer printout, with numbers put into 6 decimal places. The red line shows where he restarted the run in the middle, with numbers to only 3 decimal places. His model was a completely deterministic simulation, but the tiniest change made the results unpredictable. Chaos makes it impossible to use models to reliably predict or control the economy.
But some people say that the free market must be regulated, because it is unstable.
Then they do not understand the chaos. Chaos means that even totalitarian regulation of the people, markets, and economy into a deterministic machine cannot make them stable. And as we are seeing now, the regulations can trigger the chaos. The free market, which is the self-organizing actions of millions of people, is more stable than a market where a handful of morons can turn things upside down, even try to fundamentally transform the economy overnight.
But our morons in Washington are guided by math and computer models of the economy.
Such models are only useful if they exactly match the reality. The equations and data must be comprehensive and precise. The tiniest error makes the results unpredictable and the models unusable.
But if the equations and data are approximately correct, will the results be approximately correct?
No. That is what we have just been talking about. In a complex, nonlinear, dynamic system, there is no continuity of approximation. Approximately correct models and data can produce results which are nothing like the reality. Also, the mathematics cannot model irrational human behavior. And the recent research, and the existence of manias and panics, show that the economic decisions of the human beings are not always rational, even though the jackass economists assume that they are.
Then the models and data of the jackass economists are bad?
Their equations are guesses and approximations. Their data is so bad that every day they are surprised by what happened months and years ago. And then they revise it and get more surprises. And some of their so-called data is just estimated or calculated from their equations. So they have the garbage in and the garbage out.
I see.
And they make bad assumptions and see patterns where there are none. They may assume cause and effect from chance and coincidence. They jump to conclusions. These are not the required omniscient supermen. They are the incompetent monkey men.
Then this is why they were surprised by the Great Recession?
Yes.
Can economic statistics help?
Statistics are about the past, which does not predict the future. Trends can suddenly reverse. Things are not always average, and not everything follows the normal distribution. And bad data make bad statistics. And the jackass economists sometimes even use the wrong data. Like when the jackass Fed missed the housing bubble by looking at the rental price of houses instead of the selling price.
Can our morons in Washington control the economy by quickly reacting to the changing conditions? Such as when the jackass Ben Bernanke said he could raise interest rates in 15 minutes.
No. Their economic models and data are incomplete and bad, and they have the delayed feedback. It is like they are driving down a curvy road blindfolded, being fed bad information by jackass economists. and with variable time delays on the steering wheel, accelerator, and brakes. The free market does better with the invisible hand.
What should they do then?
Stop their jackass central planning. Provide police protection. Make a stable dollar and leave it alone. And let the markets and the invisible hand work. Most of the economic damage the past few years has been done by the jackass Fed and Meathead Congress. Now, if you don't mind, I'm watching a movie about Washington, called From Here to Absurdity.